Welcome to the Cryptocurrency Odyssey Show. The Cryptocurrency Odyssey Show highlights the latest news on cryptocurrency, blockchain technology, disruptive technology, economics, and world events. They interview top thinkers and entrepreneurs in the industry, and they cover topics like Bitcoin, technology developments, investing, trading, and ICOs. As our world keeps getting more and more digital, cryptocurrencies are changing along with it. Okay, audience, here's the host of Cryptocurrency Odyssey, Matt Leach.
Hello, listeners. Welcome back. Today's show is more about cryptocurrency exchanges because things keep changing with them and what that means to you. We're going to talk about the intricacies of cryptocurrency exchanges and get us all more educated. That's the whole game. Get us more educated about this platform for cryptocurrency. And my co-host today is Noah Leach, and he'll be helping me educate all of us about this. Hi, Noah. How are you doing?
I'm all right.
Well, good. It's great to see you back here again. And here's a quick description of exchanges and how they function coming up here in the cryptocurrency network. The show is actually a continuation of the explanation of the current state of the crypto exchanges. It seems to be changing. We've got some news, and we've adapted the content, of course, because listeners have asked for more exchange information. And today we'll have a look at also at how, as a user of crypto exchanges, cryptocurrency could be an economic path to freedom for you. But first, a quick review of what an exchange is. You've possibly heard about the newest exchange problem that has popped up lately in cryptocurrency. This one has the government asking even more questions than before. The two exchanges involved are Celcius and the OpenSea NFT network. They're basically the latest casualties of this crypto winter. They're freezing, I guess. So here are some of the reasons the government is asking questions. The cryptocurrency platform Celcius network was left with a $1.2 billion deficit after suffering from a digital version of an old-fashioned run on the bank, according to its bankruptcy filing in the United States. They're blaming a combination of its own poor decisions, a global crypto apocalypse, and unfavorable media coverage. And so the company has filed for Chapter 11. And that's a U.S. process that allows companies to trade while restructuring their finances. Celcius froze customer funds last month as investors raced to withdraw their assets amid a crash that saw the value of cryptocurrencies tumble worldwide. The filing revealed that the company has $4.3 billion of assets set against liabilities of $5.5 billion, of which $4.7 billion is owed to its users, who number about 1.7 million as of this month. In a 61-page document, its chief executive, Alex Mashinsky, admitted the company had made what, in hindsight, proved to be certain poor asset deployment decisions. Okay, these included giving 35,000 of the digital currency Ether to a company called Stakehound, which then lost them due to an alleged error by a third company storing the assets, which was called Fireblocks. In June last year, all this happened. Stakehound issued a suit in Tel Aviv against the Israeli-based firm for negligence, which Fireblocks denies. Celcius also borrowed from a private lender between 2019 and 2021, only to find when it tried to repay the money that the lender was unable to return the collateral that Celcius had put up to secure the funds. So the plot thickens. Celcius has now been accused of being a Ponzi scheme and is being sued over that stuff there. So the cryptocurrency platform, which was valued at $3 billion at one point, is owed $439 million by the lender and $361 million of it in cash and the remainder in Bitcoin. So it's sounds like a tangled up mess to me, and hopefully we can get that straightened out this year. Weakened by missteps such as these, Celcius said had been putting plans in place earlier this year, and it believed they would have succeeded in the near future if the market had not tanked. So that's Celcius's story, and it's pretty. I think it's pretty accurate. In addition to this, OpenSea co-founder and CEO Devin Finzer revealed that the NFT marketplace is laying off about 20% of its employees. Finzer didn't indicate how many people that represented. A Forbes article in January celebrating Finzer and his co-founder Alex Atala, 2.2 billion net worth each, said the company employed more than 70 people, but an OpenSea spokesman tells The Verge that 230 people will remain with the company. Still, a sustained drop in activity and prices has led to headlines about how NFT sales are flatlining or have fallen off the cliff, as some people put it, while backlash to the entire concept has followed many companies that adopted them or suggested they might. Recently, Reddit launched an NFT collectible avatars feature without openly referencing the term, and just today a Sony marketing exec had to dismiss concerns from gamers that a new digital collectible feature would bring the blockchain and NFTs to its PS5s. So that's where that's the latest news that I could find about that. And so let's get down to talking about it. Now that we have all that information out in the open, let's talk with Noah and get his input onto that. The one of a similar question to last week, but kind of changed a little. How do I protect my investments with companies like Celcius and OpenSea when I invest?
Since OpenSea does NFTs, I guess just hold your NFTs in a file somewhere. I'm not too sure exactly how you can stop well, I guess once you have the NFT, it doesn't really matter because it's just pretty much digital art, and all it is pretty much a certificate.
Right, you get a certificate with
showing that you
number.
own this and all that other jazz. But if it goes bankrupt, what happens to that? I guess it kind of do you still own it? Does it invalidate it? I'm not too sure. But as with like Celcius, the easiest way to stop yourself from losing money on an exchange is to hold your coins in a hot wallet, or not a hot wallet, a cold wallet, which is an offline wallet. So you hold all your coins in there, and the only time they should ever be on an exchange is when you're ready to sell, or if you're staking them or something like that. But all those people that just staked their coins on Celcius, hoping for those annual returns, just lost all their money more than likely. Celcius says that they plan on allowing their customers to get their money back throughout the restructuring or after the restructuring, but I don't see how that's going to be possible, because I read on CNBC just the other day that Celcius only had $167 million of cash on hand, and with the amount of debt that they're in, I don't see how they're going to be able to restructure and give their money back to their customers. They're not FDIC insured, so none of their customers with any sort of account value below $250,000 is going to see any money back, and the rich people that invested in Celsius aren't going to see their money come back more than likely. I don't know how they're going to get that money back. I mean, what did you say? It was like 4.5 or 4.7 billion dollars in customer money that is owed, and then they have 4.3 or something like that in debt.
Yeah.
Because of poor management.
Mm-hmm.
Yeah, it's just I could see how people would think that that's a Ponzi scheme, especially since they lost the money or lost those coins or whatever it was, 35,000 Ethereum coins. Oh man, that's a lot of money right there, but not as much as if it were Bitcoin, but still.
Well, yeah. Now, what got me is that they had put that money or that currency, cryptocurrency, into that holding bank, and those guys lost it. They just apparently it's like, we put it in a paper bag somewhere, we don't know where we put the bag, and I'm wondering how that could happen.
Probably somebody that's inept with a wallet. They might have once they sent it to the bank's wallet for holding, the bank probably tried to transfer it to another wallet, or they who knows what happened with it, but I would assume that it was just ineptness on them, and that they tried to transfer it to another more secure wallet for holding, and then they got the address wrong, and it just poof went into the ether, so to speak.
Okay, yeah, well, that could be that's a pretty good explanation. You got to have that address exact, or else it goes away, and there's no way to recover it, as far as I know.
No, there isn't. You can't reverse a transaction, as far as I know.
Mm-hmm.
So once you send it to a wallet, that has to be perfect to the letter, and since they're like 50 or 80 letters long, you got to copy and paste just to make sure that it's right, but you got to make sure you get the whole thing. You can't just get half of it, or even if you miss one letter, it's gone. There's a good chance that somebody else might be seeing that Ethereum show up in their wallet.
Yeah,
but
yeah.
you never know. It would be like hitting the lottery.
So that brings up a question, might be a little bit too technical for the guys we're talking to, but say that you had a packet like that. Now, that information packet wasn't exactly correct, so it didn't go into the wallet you were sending it to, but doesn't that packet just sit around and float around on the system?
As far as I know, if it goes to a wallet that is active, then you might be able to recover it from the person that owns that wallet, but trying to contact them is going to be the big problem.
Yeah, you don't know who they are.
Right.
Yeah.
But you might be able to figure out some way, maybe through the exchange or something, or whoever you did the transfer through, you might be able to maybe get that person's information and talk to them. But if they're willing to give it back to you, who knows? But if it, as far as I know, if you miss a letter and it goes to a wallet that doesn't exist, then it's just gone. There's nothing you can do. It's like it never existed. Poof, it's gone. That's kind of like what they call burn wallets too. There's burn wallets that are inactive wallets that they, like Shiba Inu and whatnot, will send tokens to decrease their or decrease the supply, which increases the value of the token.
Mm-hmm.
And those wallets can't be accessed by anybody because, well, there's no password or anything like that. It's literally just like a voided out hex number, so, and everybody uses it, and that wallet apparently is supposed to have a lot of money in it, but you can't get to it because it doesn't have a username, password, or anything. It's just, it doesn't exist.
So how did okay, it doesn't exist.
Yeah.
So how do they, in other words, when they go to burn it, they just send it to a wallet that really doesn't exist, and then the whole thing just dissipates into the network?
It's just it's into the ether. It's
ether.
like it never existed.
Huh, interesting. I still have I don't know, it makes me think that eventually the ether's going to get so plugged up with mistakes that nothing's going to work because there's no room left anymore.
Nah, I don't think you have to worry about that. You're talking about like bytes.
Like byte?
Yeah, like the amount of storage space for tokens, like bytes. You're not even getting into megabytes. So, and with today's storage technology, it would take you forever to fill that up.
Okay. Now, I guess this is all part of the crypto winter, which that seems to be the words that are on every crypto investor's lips right now. The cryptocurrencies have suffered a brutal come down this year, losing $2 trillion in value since the height of a massive rally in 2021. And I'm sure you all remember that, where cryptocurrencies were up and everybody was advertising them and all that type of thing. And you don't see that anymore. right? Not as much as there was. There are
They ain't got no money to advertise.
Exactly. They don't have any money, and neither does anybody else. So, Bitcoin, the world's biggest digital coin, is off 70% from November's all-time high of nearly 69,000, and that was only 8 months ago, and it's dropped 70%. Now, that's resulted in lots of experts warning of a prolonged bear market known as crypto winter, and you've probably heard about that because I just mentioned it, but it's the big catchword for now. The last such event occurred between 2017 and 2018, but there's something about the latest crash that makes it different from previous downturns in crypto. The latest cycle has been marked by a series of events that have caused contagion across the industry because of their interconnected nature and business strategies. And of course, that's a reference to the stablecoin crash. Back in 2018, Bitcoin and other tokens slumped sharply after a steep climb in 2017. The market was then awash with so-called initial coin offerings, where people poured money into crypto ventures that had popped up left, right, and center, but the vast majority of those projects ended up failing, and the 2017 crash was largely due to the burst of a hype bubble. Clara Medley, research director at crypto data firm Kaiko, told CNBC. So that's kind of what we're looking at with the crypto winter, and we're hoping that it'll be over soon. But from what I'm hearing, it's taking going to take maybe a year for the crypto winter. I mean, what would be the signs that the crypto winter is over?
I mean, the market's always been so volatile, so trying to figure out when it's going to be over is going to be hard. But I would have to say once Bitcoin really starts to climb and climb fast, you might be looking at an end to it. But right now, I just checked Bitcoin earlier this morning. Sorry, excuse me. It's at $22,000. Yesterday it was at $21,000. The day before that it was at 20 or somewhere around 20 and 21. So it's been going up steadily and slowly, but that's not a sign of anything ending or even
beginning.
Yeah, beginning. It's just what it does, And like I said, it's super. Trying to do any sort of technical analysis on the crypto market is probably the most asinine thing to do because it's just so volatile that trying to figure out when it's going to go up is hard. Nobody really realized that they could predict that it's going to go up, but I'd say that they're probably 10-15% chance of them being right, with the volatility. I would say that a year's probably a good reset point, just based off of how the stock market works. But for the crypto market, it could be 6 months, it could be a year and a half. It could start any time. But my indicators of the market going up is when the American dollar starts to get stronger.
Okay,
that's going to be when when I'm going to start noticing, or when I'm going to start predicting that it's going to start going up, is when the USD gets stronger, the stock market starts to recover, and that's all going to be intertwined with the stable coins and everything else too. So when the stock market starts doing better, then you're probably going to see people dumping money into Bitcoin again. And then when Bitcoin does better, you're going to start seeing all the other smaller coins start to go up as well, since they're pretty much tied to it.
Right.
Even though they don't want to be, but Bitcoin pretty much controls the crypto market. So, that's going to be your indicator. But
Okay.
Since they said that the U.S. economy is expecting a downturn for at least a year and 3 months, which is 5 quarters, I would say that you're probably looking at a year and 3 months before you start to notice a huge rise. And I believe his name is Kevin O'Leary, the Shark Tank millionaire investor guy.
Mm-hmm.
He said that he said he's still dumping money into Bitcoin, but I mean, he's a millionaire, so buying it on the cheap is a no-brainer. But for people like me or you, we kind of, we got to do like weekly recurring deposits or something to buy Bitcoin. Like right now, I only own I own 0.007 Bitcoin. Not a whole lot. It's only a couple, or it's less than it's less than $200 worth of Bitcoin. But I'm going to start buying up little amounts slowly and surely until I have a small little nest egg of Bitcoin, and then I'm just going to let it sit and wait. I'm not going to buy one Bitcoin. I might stop at half a Bitcoin because that would be good enough for me. But anyways, he was saying that he's expecting Bitcoin to hit $10,000, which is what I've been saying for the last few weeks, is that's my low, and some people have been saying that it could go as low as 7,000. And I'm like, even better, because I'll take a paycheck and just buy up as much Bitcoin as I can, at that price, that's a steal.
So all these little blips in the graph there, Bitcoin going up and then back down, and eventually it's going to go lower than.
It's a possibility, I mean, it's been holding steady at 20,000 for a few weeks now, so that could be an indicator of it being the bottom, but we haven't even begun to see the recession hit the U.S. economy yet that they're talking about, even though we're already in one, but nobody wants to say it.
Right, yeah.
And, they're saying that we're supposed to have at the end of 2022 that year and 3 months of recession. Well, that's a depression. You know?
That's a depression, and nobody wants to talk about depression.
That's neither here nor there.
Right.
So yeah, I think that we could see it drop down farther than that, and I would more than likely expect it. So if you have a couple grand sitting in, like, say, a Webull account or a Robinhood account that you don't have invested in something right now, I just hold on to it and see what happens. I don't think that those types of brokerages are going to be going under, or that they're even going to be looking to go under. I think that they're fairly safe investments. I'm not too sure about Robinhood, but Webull I think is a fairly safe investment place to hold your money. E-Trade or some other company like that where you can hold your money and it be similarly safe should be okay. Plus most of them are FDIC insured too, so you don't really have to worry about that because they're technically banks, or really they're banks that trade on the stock market. So
okay, I was reading. I've read this information a couple of times. They're saying several articles that I've read talk about a 4-year cycle for cryptocurrency, and I didn't understand it fully where they got the 4-year cycle, but they're saying that we're at the end of that 4-year cycle where it's down, and when the cycle ends, then it'll start going up. Have you heard anything about that? About
I guess you could just call that a bubble. It's a 4-year bubble.
It's a 4-year bubble?
Yeah, okay. where it goes up and goes down, the bubble pops, it goes down, and then it resets pretty much, cleans out all of the people that have over-leveraged themselves, like what's happening right now with Celcius, Voyager, 3AC, all those places. They're all getting cleaned out because they over-leveraged themselves, and that's good for the market for the most part because it means that the prices are going to become cheap as the market's flooded with more unowned coins and stuff like that, and you can just buy it up on the cheap, and then that's how you can make your money. Another good way to make money is doing what's called scalping, which is putting in a small amount of money and say, like, let's say Bitcoin, it drops back down to 20 grand, then you wait for it to jump up to 21 or 22 or whatever it jumps up to, and then you make you make a couple $100 on the side or whatever it is, and then you just keep doing that over and over, making your daily money. Mm-hmm. And this is a great market for it right now because it's easy. It's easy to do. It's cheap to do. So I'm guaranteeing that anybody with at least $1,000 in their accounts is probably doing that on the daily, setting buy orders and sell orders and stop losses and stuff like that in order to make their money because, well, it's a bear market. So scalping is what a lot of the day traders are going to start doing, or if they're not already doing it.
Okay, so let's see here. So you think this is a bubble, and well, it crashed,
The
burst.
the bubble's already popped. So
Bubble's already popped.
Yeah.
So we're waiting for a new bubble. Then we're waiting for a new bubble, and that's when prices will go up.
yeah, after Celcius and Voyager and all this jazz gets shaken out and it's all resetting, we'll start to notice a rise again as people's confidence comes back up. But I don't think that's going to happen for quite some time with the way that the stock market's looking and the economy is looking. So, now might be a good time to start saving up money in your bank account, just so that way when the time does come, you can start depositing that money into your preferred exchange for trading.
So we're getting ready for another bubble bath. To make it funny, I guess. So, hi, audience. A quick reminder, you're listening to Cryptocurrency Odyssey, airing live weekly on KWRH 92.9 FM on Fridays at 10 a.m. in St. Louis, and nationwide on Zeno FM / your city on Monday to Friday at 11 a.m. and 4 p.m. Now, if you like what you hear and would like to sponsor us, please give me a call and let's talk. We also have a coin you can mine with an Android phone. You can get the coins at a low price as they're already on an exchange and hold on to them. It's a special one called Loop. You can work it for a year, and it's on the Bitmart exchange. Give me a call at 314-781-7612 or 877-212-1400. You can also email me at mlcryptodude@gmail.com, and I can email you the link. So give that a try. We're coming up to break time here, so I'm going to talk for a little while, and then when the music comes on, that's our break, and we'll be back after the break. So when we come back, we'll be talking about other companies that are going through similar issues as OpenSea and Celcius, and so stick with us.
Commercial Energy Consultants is a 10-year-old company focusing on middle to large commercial accounts. CEC offers these companies services by lowering their electric and natural gas rates. They don't charge for this service, and they've got over 9,500 happy clients with over 1 billion kilowatt therms under contract. What makes them different is their reverse auction. CEC offers a way to have available suppliers in 17 states bid openly for energy business. Why, their mission is clear. Bring their clients the low bid for their energy consumption. In fact, because of their competitive auctions, energy consumers would be well advised to consult with CEC first. Why pay more for the exact same power? For more information, contact Mike Grimes, CEO of Commercial Energy Consultants at 1-877-212-1400. That's 877-212-1400.
Hey, listeners, saying thanks to your customers is nice and polite, but expressing your gratitude in memorable and ongoing ways can boost your business. At Promo Experts LLC, we exceed our customers' expectations. For over 20 years, our product knowledge and experience has helped them with their marketing initiatives and trade show graphics. We are happy to put that experience to work for you. Quality products, great customer service, and prices are our #1 priority. We work with you to find unique, creative, and new ideas that fit your image and expectations, helping you build strong relationships with your customers. When you select Promo Experts as your marketing partner, we help you to see more than the big picture. For more information about this exciting opportunity, contact Diane Carson, President, at 636-458-5241. That's 636-458-5241. Let promo experts help you to move your business brand beyond the bland.
Attention! Here are 5 things that you can do to avoid coronavirus scams based on the Federal Trade Commission guidelines. Number 1, do not respond to text messages, emails, or calls about checks from the government. The government never sends emails requiring that you do anything. Number 2, ignore online offers for vaccinations and home test kits. Number 3, hang up on robocalls. Scammers are using illegal robocalls to pitch everything from low-priced health insurance to work-at-home schemes. Number 4, watch for emails claiming to be from the CDC or the WHO. Use sites like coronavirus.gov or usa.gov/coronavirus to get the latest information, and don't click on links from sources that you don't know. Number 5, do your homework when it comes to donations. Never donate in cash, by gift card, or by wiring money. For more information to help you be prepared, contact Tony Zifilopoulos. He's a 25-year IT professional with the last 6 years specializing in cybersecurity. Tony is a certified information specialist auditor, and he will review your cybersecurity. Tony can be reached at 314-504-3974. That's 314-504-3974. And email TonyZ@fixvirus.com. His website is www.fixvirus.com.
Have you always wanted to write your own book but don't know where to start? Publishing Concepts, a publishing company located right here in St. Louis, offers everything from consulting, book printing, copyrights, ISBNs and barcodes, print book layout, ebook and iBook layout, graphic design, cover design, ghostwriting, typing and editing, distribution, marketing, and more for an affordable price. Visit publishingconceptsllc.com or just Google Publishing Concepts to get started today, or call 314-781-8880. That's 314-781-8880. Publishing Concepts. We help you sell more books.
Hi, listeners. Welcome back to our discussion of cryptocurrency. Today we're talking about OpenSea NFTs. We're talking about Celcius, and we're talking about the crypto winter. And we'd love to find out your comments about those. Go to our website, take a look. We're now on YouTube, so go to YouTube and type in Cryptocurrency Odyssey. You'll be able to watch our videos of this show. Our podcasts also will be on there, and you can leave comments. Let us know what you'd like us to talk about, and we will, as long as it's legal. Okay? So anyway, wanted to carry on with the show, and my next question, how many companies like Celcius and OpenSea and others will be participating and going through similar issues in the future? And how many prospective companies right now might there be? Because it seems to be getting worse to me.
Well, there's probably a bunch of companies out there, like we said before, that are insolvent right now, that aren't, that can't cover their debts or anything like that. Depending on how well they manage their money, they might be able to weather the storm, but I'm not sure, how many would be out there until they actually say something. Most people, I would assume if Celcius is going down, Voyager is going down, they aren't really considered huge players, but anybody below them, I would bet, is having a hard, rough time, especially if they took that crypto that people put on their networks and then loaned that crypto, or took loans out against that crypto in order to expand their business opportunity, or to buy other cryptocurrencies to hold on the exchange to make money on, like banks do. They're probably in a dire world of hurt. Like the with Celcius, I'm sitting there thinking it was like they admitted, bad business practice. But if you're ever in that position where you have billions of dollars and you're loaning out pretty much all that money, or taking out money against that money, loans against that money, and then you end up in a situation like you're in, yeah, it's your fault.
Yeah, exactly.
But how many are out there? I'd say quite a few, probably. I doubt that Celcius, Voyager, 3AC, all of them that we already know about, I doubt they're going to be the last ones. And like that article that I read about Kevin O'Leary's whole thing about what he was saying about crypto, I agree with him that this isn't the last, and that the crypto winter is pretty much shaking the tree to get those people out. So is Coinbase going to go under? I don't think so anymore. I thought for a while there that Coinbase was in dire trouble, with their with holding $285 billion worth of people's money. But now that I'm seeing that, most of the crypto exchanges like Celcius and Voyager, where they only hold $1 billion to $3 or $4 or $5 billion, I'm thinking that Celcius might actually I'm thinking that Coinbase might actually make it out alive, only because of the amount of money that they hold.
Because they've got a lot more.
Yeah, they have
crypto.
They have a lot more crypto, a lot more wiggle room than Celcius would, and I'm not sure what their financials are. But if they aren't filing for Chapter 11 by now, I would assume that they probably aren't going to. So I think that Coinbase is going to be safe, but only because they're one of the biggest players, not because of good money management or anything like that,
Mm-hmm. Yeah, a lot of they make banks keep a reserve of cash, and I think that's what the Federal Reserve is about. They're the guys that monitor that, and they make sure the banks have cash just in case of a downturn, so that they don't go bankrupt and lose everybody's money. So that may be where the Fed wants to go with crypto. Have a crypto reserve.
Well, I'm sure
the
that
exchanges for the same reason.
I'm sure that at the end of the day, once the federal government gets their hands on it, they're going to say, well, you need to do it like a bank would do it. If you're going to operate like a bank, you need to be a bank. I'm sure that's what it's going to come down to. And Celcius and Voyager, 3AC, all of them were operating like banks, loaning out their customers' crypto that, to get loans, or,
Right.
Using it as collateral to get loans. And so, that's probably what's going to happen, especially after all this debacle, because there's billions of dollars that have been lost, and billionaires that have become millionaires. So,
Right. Billionaires that have become millionaires.
that's what they say, They're like, best way to become crypto millionaire is to start as a billionaire.
Right, exactly. That's makes a whole lot of sense.
They say the same thing about the trucking industry too. Best way to become a millionaire driving trucks is to start off with $2 million. Be a multimillionaire.
Yeah, well, I actually saw something like that about cryptocurrency, and I can't remember how it goes, but that was basically it. You start out with $2 million, and you become a millionaire,
right?
Real quick. So anyway, when you said that you think the banks or the Fed's going to want the crypto companies to become banks. Cryptocurrency got started because of the decentralized protocols, and things like that of cryptocurrency. But for them to be called banks now, that kind of centralizes them, doesn't it? It takes away that decentralization.
Well, the network that they're working on will be decentralized, but the bank, the exchange itself, I guess, would technically be a centralized bank now, But if you're going to be operating as a bank, I would assume that the federal government would be saying, well, if you're going to operate like a bank, then you need to be a bank, meaning that you need to get FDIC insurance. In order to do that, you need to be a bank. So,
Okay,
I could see that regulation coming out, where if you're going to operate as a bank, you need to be a bank. And that would probably be the simplest way to say it, especially since Celcius Coinbase and other companies like it have, lost billions of dollars worth of people's money because they've been taking loans out like a bank would, or, giving out loans like a bank would.
Okay, so here's an article that I saw on CoinDesk here. Crypto lender Celcius has 500,000 creditors owed more than $5 billion, and I think we knew that already. Attorneys for the company said during its first bankruptcy hearing on Monday, which was yesterday, news of Celcius' liquidity crisis broke on June 12th when the company announced it was pausing all customer withdrawals, citing extreme market conditions. The company formally filed for Chapter 11 bankruptcy protection in the Southern District of New York last week. And the situation at Celcius is not unique. The lender is one of several that have been hit hard by the Terra Luna crash, the insolvency of Three Arrows Capital, and the ongoing market downturn. Now, struggling crypto lender BlockFi received a $250 million bailout from crypto exchange FTX in order to fulfill customer withdrawal requests, and could be acquired by FTX for as little as $240 million more. Less than 3 weeks after Celcius halted its withdrawals, Voyager Digital followed suit before it also filed for Chapter 11 bankruptcy on July 6th. Now, court filings paint a concerning picture for Celcius creditors, most of whom are average retail investors. The company has an enormous $1.2 billion hole in its balance sheet, and at least that much. And retail depositors who held their crypto in Celcius accounts will likely be the last to get paid back. And again, they said it was just poor money management. So does that? I guess this is all part of the crypto winter too.
Yeah. I mean, due to the crypto winter and things that are going on in the economy, this is the outcome of making bad decisions for the company.
Right.
Now,
right.
more than likely, they're those people that are like we talked about this about 3 or 4 weeks ago, where every person, if the company, back then we were just saying if they claim Chapter 11 or, they go bankrupt, what would happen to those people's money on those exchanges? Well, you're considered an unsecured creditor. Therefore, you would be the last person to get your money back if there was any money to get back at all. Meaning that you might see a settlement of some sort come back to you, but it would be so minuscule to the amount that you probably put in that it wouldn't be worth it anyways. But a little bit of money coming back is better than none. But at the same time, you have to wade through the secured creditors, which are the people that have the crypto that was used as leverage to get more money for the exchange. And they're going to see their money come in first because they were secured. Mm-hmm. So the second that they filed for bankruptcy, well, here's your money, and all the users that are considered unsecured creditors are out of luck. Mm-hmm. And that's pretty much what it comes down to.
So the unsecured creditors get to pay for the secured creditors.
Yeah, pretty much. But, whose fault is that? That's the exchange's fault for using your money to secure loans, or using your crypto technically to secure more loans, so that way they can then do whatever it is they're going to do with that money, which it seems like in Celcius' case was loaning out money to other people. And then those people can't pay back their money, so now that puts them in a poor position, just like with Voyager and what was it, 3AC, I think it was. Somebody couldn't, I can't remember who it was because there's just so much going on, but somebody couldn't pay back somebody else, which caused that person to default on whatever other loan they had. And I'm just like, well, that's what happens. They learn the hard way.
Yeah, and that's what I had been noticing. It all goes back to Terra Luna and the algorithmic stable coin that failed, and everything that was balanced on that, and they depended on that stable coin keep going, and now they're saying the total damage so far is about 300 billion, not just the 40 billion originally from Terra Luna. So that's, I guess this is adding in Celcius and the NFTs, OpenSea, and all the others. I imagine there's a whole bunch of little ones, like you say, have already done this. They've already run out of money, and maybe they filed bankruptcy, but because it was maybe only $1 million or two and not in the billions, you don't hear about it.
Yeah, it could be. It could also be that they didn't over leverage themselves like Celcius and Voyager did, because I mean, from the reports, it sounds like they just went all in. 100% of the money that we got, we're going to use all of that, and then if the market goes south, well, oh well, and I guess that's kind of where those people got greedy, and they decided, you know what, we're going to do what we want with your money, and there isn't much you can do about it. And they're right, there isn't much you can do about it now that they've frozen withdrawals.
Exactly. They've got they have control of the money, and there's no regulations stating what they can do and what they can't do.
Right. So now that they've filed for Chapter 11, more than likely, like those like Coinbase, as soon as they started noticing a drop off in the market, a lot of the people from Coinbase, like their CEOs and stuff, pulled out over $500 million worth of their own money in Coinbase stock, and they kept that for themselves. And I'm like, well, that was a smart move at one point, because now they have liquidity that they can probably use to help them weather this storm, and if they use that money properly, then they'll make it through. But like Celcius and them, they didn't have that ability, so they're going to go under. There's probably going to be a lot more that are going to go under. I don't know. I'm thinking Terra is probably going to become a defunct coin after this, because I mean, if it doesn't, and the fact that the second iteration of Terra has also failed,
yeah,
I don't see.
Well, Luna was the first one, and then Terra was the second.
Yeah, but I think they're both part of the same thing. Yeah. Terra Luna. They're the same thing. It's just two different coins. One's a stable coin, the other one is some other coin. And I mean, I never even really paid attention to Terra myself, so I don't know a whole lot about it, because I was more into like Bitcoin and Shiba and stuff like that. But
right. Well, I still see Luna being listed on some lists, and it's always listed at 0.00. So I don't even know why they're continuing to list it. Some people, I think, are feeling like it's going to come back. But
probably just because it's still available for trade for whatever reason, but nobody's going to buy a coin that literally has no value.
Yeah, if it has no value, it's not worth trading, So, listeners, if you're just now joining us, you're listening to Cryptocurrency Odyssey, airing live weekly on KWRH 92.9 FM on Fridays at 10 a.m. in St. Louis, Missouri, and nationwide on Zeno FM, and that would be /your city. So if you live in Detroit or LA, type in zeno.fm /Detroit or zeno.fm /Los Angeles, and you'll be able to pick us up. You can do that Monday to Friday at 11 a.m. and 4 p.m. For more information, you can call me at 314-781-7612 or call our 800 number at 877-212-1400. And you can visit our website on our YouTube channel at Cryptocurrency Odyssey. You can see our videos there. You can see our podcast there, and you'll also be able to leave us comments now. So go ahead, take a look at YouTube and let us know what you think. And now we continue on with another article here that I had been looking at. Basically, it's about NFTs and where the NFTs seem to be going. Today's a hard day for OpenSea because of all the things that are happening. NFT sales volume from OpenSea on the Ethereum blockchain plunged to 700 million in June, down from 2.6 million in May, and a far cry from January's peak of nearly $5 billion. And that's more crypto winter info. NFTs are blockchain-based assets which represent ownership of digital files such as images and text files, and they are registered. So when you buy one, you get to keep it. You know, nobody can steal it from you because it is registered. The job cuts that are happening there at OpenSea would allow the company to maintain 5 years of growth at current volumes under various potential downturn scenarios. And last month, cryptocurrency exchange Coinbase said it would cut about 1,100 jobs, or 11% of its workforce. And that seems to be the current status of a lot of the companies. They're laying off. And that usually means they're laying off because they can't pay people. Do you have any comments on the layoffs? Is there more than that? Have you heard more?
It's to be expected, you know. I mean, even Tesla's laying people off right now, you know, because of the economy. And that's kind of where we're at right now with everything else. You know, you're not gonna see a company not laying people off right now, especially if they have too many workers and not enough money. You know, I mean, that's only makes sense. You know, and so I haven't heard of any other companies really laying anybody off other than Coinbase, Tesla, and pretty much every other major company. You know, I mean, there's not a whole lot of hiring going on. You know, so I mean, you know, even though the U.S. economy says, or you know, they're saying that hiring is still in the positive numbers and not the negatives, but I'm like, I don't know about that. You know, that's definitely going to change here pretty soon.
The economy basically sucks, is what it is, and I know that they're saying that jobs are, you know, we're at the highest job market in a long time, but I don't really think I see that happening out there.
No, I don't. I mean, there's plenty of help wanted signs, but you know, who knows how long that's going to last.
Mm-hmm. Okay, so I guess we've already talked about that. The protections to exchange users. What kind of protections do they have in case of a bankruptcy? But pretty much you said it with if you're an unsecured person, unsecured crypto in an exchange, it's going to go to pay for the secured crypto in the exchange. So what can we learn from all this about, you know, with the current crypto winter and everything that's happening? I mean, how do we learn to stay out of it again?
It just means that you have to make sure that you're keeping your cryptocurrency in a cold wallet, which is an offline wallet. That way you're not keeping it on a exchange, and if you want to stake something to try and get that annual percentage return back, you know, you got to go with a exchange that is at least being somewhat
solvent,
but also transparent with what they're using your money for.
Mm-hmm.
You know, and I think that might be a big selling point for people going forward in the future. Is what are you doing with my money, and how are you gonna make sure that something like Celcius or Voyager or 3AC doesn't happen to you, so that way my money's safe, you know, other than just becoming a bank and get an FDIC insurance.
Right. That the transparency issue seems to come up quite a bit because they don't really tell you what we're going to do with the money. They have just been doing whatever they want, and maybe that's part of the cause of this. Is
I think
not really doing their homework, research, whatever.
If I were going to open up an exchange myself, this is what I would do: is if I were in Celcius's position, beforehand, and I had $4 billion worth of other people's money on my exchange, I probably would have used maybe 1 billion of that to loan out to other people to try and make some money, or I would have just staked it at I would have staked it at a higher, percentage point than what I would be giving my customers, so that way I make that money, because if you're staking it and you're getting, say, 7% APY a year, and you're giving your customers, say, 3.5 or 4% APY a year, you're making 2 to 3% or 3% or more APY a year on other people's money. I mean, that's just free money for you, pretty much, instead of loaning it out like you're a loan shark or you're a bank or something like that, and then when the market goes south, you don't have the money to cover it. Or you could do it where you take $1 billion and you loan that out to other companies for, interest. Then you take the $3 billion that you have left or whatever it is, and you put that at staked, and then you make 3% off of that, and your customers are making 3% as well, or making 3.5 or 4% or whatever it is. That might not seem like a lot, but over the course of years, you could be looking at a little chunk of change. That way, if the market does go south, you still have money in the bank. You're not low. You're not doing 100. You're not pretty much your debt to cash ratio isn't 100%. So keeping it at 25%, I would say that if a exchange did something smart like that, or made sure that they were only using a small percentage of their customers' money, they have a better chance of weathering the storm than they would if they used all of it. As we see with Celcius, that was a poor decision at the most, and hindsight's always 20/20, but you have to be thinking about the future as well. Since the market's so volatile, you could be doing anything, and or you could be doing anything you want, and then all of a sudden the market goes south, and now you're ruined.
Mm-hmm. Okay, that sounds good. We're on the downslide to the hour right now, and if you're just now joining us, you're listening to Cryptocurrency Odyssey on KWRH 92.9 FM, and again, you can go to Cryptocurrency Odyssey on YouTube and look at our videos and listen to our podcasts and leave us a message. Now, before we go, I got one good joke here. Why does the government refuse to work with crypto? You know what the answer is?
Why?
Because they hate the proof of work part.
Oh, yeah, that's the government for you, though.
So here we go, guys. We're at the end of the show. Come on back next week and listen to us. And again, look at our material on YouTube. And one last word is, don't take any wooden crypto.